Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Bert the Legend and L over here from the Dividend Diplomats, your favorite dividend investors out here on all of social media, guys. We are filming this here on March 23rd, finishing off the month of March, guys. This video, though, is coming out here today on Thursday morning. Hopefully, everybody's having a kick ASS week here because we got three other stocks that I'm watching right now. And the best part about it is two are dividend aristocrats. One technically is a dividend king. The other one pays special dividends here. And these are three hot stocks I'm watching right now.
Smash that subscribe button. Give this video a thumbs up. Let's freaking go, everybody. As you can tell, that 2025 has been unique in the sense that we actually have some value this year. You're finally starting to see some value. I feel like in 2024, every video was like, I guess there's a value stock somewhere. Like maybe there's value, possibly not. But with tariffs, with an economy slowing down, with consumers stretched to the end, you're finally seeing some value in this market. And for long-term investors like the two of us and so many of you diplomaniacs out there, there are some great opportunities to buy some great dividend stocks.
Great opportunities, and we are bringing hopefully three right here for you guys because there's no telling where the market's going. Don't try to time the market. You'll lose almost every single time. It just doesn't usually work like that. And if you've timed the market so well over a long period of time, please let us know your secret because we would also love to know how you do it. All right, first stock, though, is down 15% since last year, down 3% year to date. They're a dividend king, paying dividends and growing dividends for well over 52 years. We're talking PepsiCo, ticker symbol PEP, and they just made a big splash. They're buying that
Poppy brand?
Poppy, that a new beverage
Yeah.
that everybody is loving right now. They just made a big splash announcement for billions to buy them.
Yeah, I threw a post out on X. I never had it. I never drank it. And the responses, Laney, were fantastic. Pepsi scooped up a great brand in here and one of the best in the sector. So kudos to Pepsi. That's also why I like Pepsi over the years, Laney. Pepsi doesn't have to innovate everything. Whenever there's a great brand, there's a great new complementary product, they just buy them. Sweet.
Yeah.
Hold them in the
buy your ass.
Yeah. So whether it's a snack, whether it's a beverage, a different type of snack, a different type of beverage, Pepsi can always just throw some cash at it, solve a problem, and then integrate them into their brand portfolio.
Yeah, competition's gone is what they're saying, or competition's now in-house, guys. But yeah, so they are trading at 145.45. So we will rip them through the DD stock screen. Are focused on the PE, payout, and dividend growth. Bert, what did you just come across? Another news headline or something?
Yes, I saw. No, that it wasn't a news headline. It was something else. My family chat for my sister was blowing up for some reason, so I apologize, everybody.
Oh, I thought it was like a Pepsi thing. Like,
no, I wish it was a Pepsi thing, but my phone is not settling right now, so I apologize, everybody.
Well, guys, we've got some things to burst through here, guys. So we'll focus on the metrics. You guys know them by now. But PEP, Pepsi, guys, and why I'm liking this stock is their PE is below 18 at 17.5. That payout ratio is relatively safe, just like Coke, around the 65% threshold. They did just raise the dividend, which you got to love and appreciate, at about 5% this year. And the dividend growth, 52 straight years. Again, average usually is 7.25, but it was slightly lower this year because, hey, maybe they want to use that cash flow to buy some big name brands.
That's what works for Pepsi, and we freaking love it. How is their balance sheet looking? We'll throw some quick things up here as we're going through it. Trending down from the debt standpoint. Current ratio is below 1, quick ratio below 1 too, so not bad for Pepsi.
Yeah, you kind of want that current ratio a little bit higher. Quick ratio is not the worst at 0.65, but at 200 billion in market cap, something that they've probably have been through the trenches before. Again, yield is now approaching almost 4% at 3.73%, so it's very nice to see. Yielding higher than SCHD, yielding higher than BYM. So that is Pepsi stock, guys. I currently would love them lower in the near 140 mark, but let's get into dividend stock number 2 that I am watching.
Yeah, General Dynamics, ticker symbol GD. There's been a little bit of shakeup here in the defense sector industry.
Especially because Boeing just won that huge multi-billion-dollar contract.
Yeah, so you've seen a lot of turmoil here. Defense budget's looking to be chopped down 7 to 8%, I believe. Contracts aren't necessarily guaranteed in the same way they were with this new administration. It's caused a little bit of turmoil for the major players, including General Dynamics. Still, though, despite all the turmoil, Lanny, it feels like the stock price should be down significantly. It's not. It's basically flat year to date. It's flat at 0.92%. Last 52 weeks, they are down 5.58%, but it is definitely down from that 52-week high from what you were experiencing with General Dynamics. The 52-week high is $316.90. So it's come down, even though you're not necessarily seeing it in that year-to-date stock price chart.
Yes, very valid, and that's what catches my eye was how far away they are from that 52-week high. Exactly. So the metrics are looking fairly solid. The PE ratio, again, trading at 263.41, is less than 18 at 17.74x. Dividend payout ratio looks gosh damn safe at 40.40%. So they keep paying, keep raising the dividend. Bert, what does that dividend growth rate look like for
5 year.
General
All
Dynamics?
right, 5 year dividend growth rate 7.27%, and they are an aristocrat. They've increased that dividend for 30 plus consecutive years. And now that yield, now that they've come back up that 52-week high, that yield's basically in line with their 5 year average. That yield of 2.28% is just 10 basis points higher, 12 basis points higher than the 2.16% 5 year average dividend yield.
Yep. Love it. Yeah, I'd like a little bit more margin on the yield, but that's where they're currently at. Again,
It's,
long-term debt's trending down. Current ratio is I really like it at 1.37x, and I like the quick ratio of 0.82x. So again, over my 1
yeah.
and 0.5 thresholds there.
Look, this could be a great opportunity to buy some great defense company stocks, especially when there's turmoil in the sector. No matter how much less they spend, there's all General Dynamics ain't going anywhere, and especially if the rest of the world's going to start buying up.
Yeah, there
Um,
just aren't too many players in the space, guys.
no, so that's why you position yourself with one of the
It's
best.
a high barrier of entry.
I would say so, unless Lanny and I are going to start that factory to build our own fighter jets, the Diplomat fighter jet.
I could see Elon doing it possibly.
Yes, that's absolutely right. So General Dynamics is number two. Number three, oh Lanny.
And for those with GD, I would
number.
like it near 2.5,
All right, two.
or 250, aka kind of a 5-ish% drop.
All right, so you're not that far off from it. Five
Not far
percent,
off.
not terrible. All right, you're watching, so let's see it fall five. You tell us about number three, though. This is gonna be a great one.
All right, guys, this is a stock that I think is priced to buy. This is PACCAR, PCAR. They make their Peterbilts, the Kenworths, the big semi trucks you see on the highway, transporting goods. Or helping people get their goods transported. They're down about 6% this year, down 21% since last year. 51 billion in market cap, so not as big as GD or as Pepsi. But hey, the metrics are looking great, and this is not including again their special dividend. I typically like to leave it out of the analyses because dividends alone aren't promised, and the special dividend can always be volatile or not paid at all. Bert,
Yeah.
$97.11. Definitely like the price where they're at. Projected EPS just over $7, so 13 times on the PE ratio, Bert. And that normal payout ratio, again, they pay about 33 cents a quarter for their basic dividend. It's only 18%.
Yeah, that's so low. That's why they can afford a special dividend, such a large special dividend, nonetheless, because that standard one is only 18%. 5 year dividend growth rate, 10.94%, and they've increased that dividend for 15 consecutive years.
Yeah, it's really nice. Dividend yield, again, is hard to look at for the 5 year average, but the current yield is 1.36%. So right around where the S&P 500 might be slightly higher right now. You get a lower yield, a special dividend to sweeten the pot, plus a nice strong dividend growth rate. Pretty sure the last dividend increase was from 30 to 33 cents, so 10% increase. Again, long-term debt is slightly up from last year, but the current ratio and the quick ratio are like
fantastic.
It's beautiful. Yeah,
Yeah, well, look, they're a great dividend stock without the special dividend. You don't need the special dividends to look at the metrics and say it's a
exactly
solid company. That just adds not like a cherry on top. That's like a whole like cherry tree on top when you start looking at their special dividend.
That's like a Peterbilt on top, right?
Yes.
But those are the three stocks, guys. Pepsi, again, like them near 140, GD near 250, and I like PACCAR at the current price. PACCAR is probably my smallest position out of the three, maybe between them and Pepsi. I think GD is really ballooned up over the years from their price point, but those are the three stocks I'm looking, three stocks I'm watching. Bert, what's your feedback here?
All of them. They're all great stocks. I mean, I had my five I'm watching there. It could have easily been eight and added these on there. I think they're great companies for great prices. And they're all close to that buy zone. And that's what's important. We're watching, we're running them through them, and we're getting
Always
a
ready.
plan so we can always be buying.
And I've always said it, always ready. No Matt Cardona, guys. So let us know what stocks you're buying right now. What do you think of these three stocks? Do you like Pepsi stock? Do you like GD stock or Pack Car stock? Let us know in the comments. Let us know what other passive income producing assets you're buying this year. Like the video, subscribe to this channel, and Bert, hit them with your sweet chin music.
You're either with us or you're against us, Jack.
That was Bert the Hurt and Lanny from the Dividend Diplomats, over and out.